What is up guys, Taki here, and in this video I want to go over my bull case and investment thesis for FXS and Frax, the stablecoin. So if you like the content, please like and subscribe and leave a comment in the comment section below. None of this financial advice, and I do own some FXS as a full disclaimer, so I may be biased. Probably biased. That being said, this is going to be the agenda of the video. This video has been in the works for a couple weeks now, so I don't even know how long it's going to be, but if you want to skip through some sections, timestamps will be in the description below, and hopefully by the end of this, if you do watch the entire thing, you'll come out and you'll have a better understanding of Frax, the risks associated with Frax, and just learning more about the entire curve ecosystem. So hopefully that's the goal, right? That's my goal. So that being said, let's go over what Frax is and FXS's role in the entire ecosystem. So Frax, most of you may know, is an algorithmic stablecoin, and I know people get triggered when they hear algo stablecoin because like Luna UST, never gonna work. But Frax is taking a more conservative model that's less aggressive, and of course in a bull market, the market rewards aggressive teams that are growing rapidly. But of course, if something grows too fast, such as USD, in hindsight, it's 1 to 0. But Frax is taking a more slow, sustainable, a slow approach to growth. And Frax is a partially backed algo stable. It started with a 100% centralized stablecoin, backing, but they're looking to decentralize it over time. And I'm not sure if it'll ever get there, but that's the goal. They have this minting and redeeming mechanism where, depending on the collateralization ratio, and if the CR, right, the collateral ratio is 90%, then in order for you to mint 100 Frax, you have to supply $90 worth of USDC and $10 worth of FXS. So similar to the Luna UST model, but much less or much more conservative. This is the historical CR ratio. Like I said, it started at 100%, went to roughly 82-83% in February, and it kind of double bottomed there in November. And then as the market started to go down, the CR ratio, or the CR went up over time, just so Frax can maintain its peg. And ever since Frax launched, it has maintained its peg, so the peg itself has never been in question, partly because it has been collateralized with locked assets, with assets that are generating value, which I will go over later. So little summary: partially algo stablecoin. The market cap of Frax dumped when Luna collapsed because the entire market was risk off, and people just wanted to get the hell out of anything with anything associated with algo stablecoins. And to mitigate risk, FXS burn, right? So with the whole FXS burning mechanism, that was also stopped in order to mitigate risk, and that's the reason FXS is down 90%, and why the market cap of Frax went down roughly 50% from 2.8 to 2.9 billion to roughly 1.4 billion, which is where it is now. And when the markets were nuking, there was this proposal to move the CR ratio to 100%, which essentially made Frax a wrapped version of USDC. And you might be asking yourself, what's the point of Frax then? But when you're investing in something, you're not really investing in what it is now. You're more investing in what it could be in the future. And I guess could is an uncertain term, but if you look at what the Frax team has been doing, which I'll go over later with FRAXBP, right, which is the entire reason I'm bullish on Frax, it makes more sense. And FIP 58 deprecated the burning mechanism, so even if the market cap of Frax expands, there really isn't going to be that much burning of FXS. Right now, it's mostly a governance token, but I'm going to assume that at some point, the FXS burn is going to come back. I think the temporary halt to that is just the team's reaction to the market conditions. And once there's more confidence in the markets, once that's restored, I think the FXS burn will come back. It might take a while, right? I'm not really buying this because I expect a pump tomorrow. I'm just forming a long-term conviction thesis, and just thinking about everything in first principles and just really making a longer-term bet. But a longer-term bet in crypto is 6 months plus right now, which really isn't that long-term. And touching on the fundamentals of anything in DeFi, of course, FXS burn being stopped, can Frax even get to a decentralized state, right? And that's always in question, and I don't really have an answer to that. But when you think about the fundamentals of any project in crypto right now, especially DeFi, it's very reflexive, right? Price go up, yields go up, fundamentals are great, right? People are risk on, people will ape into whatever, and you can throw anything on the wall and it'll probably pump. But when everything goes down, then the yields go down, the fundamentals of everything looks atrocious. But the true alpha, right, the true edge that you have, right, is by identifying projects that, yes, the short-term fundamentals might look bad, but is the team building what's the roadmap? Are they set up for success? And is it sustainable, right? That's more the questions we should be asking ourselves. And when I look at Frax, the entire thing, and since inception, if I look at everything the team has done, I'm pretty convinced that they're on the road to success, which I'll go over later. Like I said, FXS is down roughly 90%. I think right now it's trading a little bit over $5, and yeah, that's, I just felt like the risk reward here was good, and yeah, like I'll go why. There's always the risk of USDC blacklisting Frax, right? Because it's partially backed by USDC. So there's always FUD around, but if Frax is ever a threat, can't the government go to Circle, and can't Circle blacklist Frax? And then I'll also go over the threat of a bank run, which everyone is obviously scared of, right? So mitigating, or not mitigating, but I'll explain the two risks and I guess the team's response to this and backing it up with some numbers. So I'm not going to read through all of this. This is in response to like the blacklist question from Sam, right? Sam Kazemian is the founder of Frax, and TLDR is that Circle can blacklist addresses for USDC. So I don't know, if I'm like some bad actor and the government identifies my address that holding like 10 million USDC, then the government, I guess, or anyone can go to Circle and be like, okay, blacklist that guy's address because he's a bad actor, right? But because Frax, the USDC that they have in their reserve, it's not just sitting there in their wallet, it's always being deployed in various DeFi protocols, such as CRV, AAVE, Compound, etc. So if Circle wanted to blacklist Frax, and if they didn't like what Frax is doing, then they can't just say Frax is bad, like whatever backing Frax is bad. No, they have to actually go to AAVE, CRV, Compound, and blacklist those protocols, because all of Frax's stablecoins, right, centralized stablecoins, or mainly USDC, it's being deployed in these DeFi protocols. And if Circle were to blacklist like major applications such as AAVE, then it kind of destroys the use case of USDC, right? Because USDC is considered to be the safest crypto asset in terms of holding its peg. They've done a bunch of transparency reports. So in the short term, it's very unlikely that Circle will blacklist Frax. Of course, if Frax gets to like $1 trillion market cap, then at that point, if we're at that point, then FXS probably is going to get me retired, right? So it doesn't really matter. Basically, the answer is in yes, there's uncertainty, but in the short term, there's very little risk of, I guess, Frax being blacklisted, because in order to do so, Circle has to essentially destroy like one of the major use cases for USDC, right? Because if Circle blacklists AAVE, then no one's going to want to hold USDC, right? And then second is the risk of a bank run. Of course, UST had a bank run, and it trended to zero. And Ouroboros Capital, he's a great follow. He went over the math on why currently it's impossible for Frax to experience a bank run. And he explains it here. UST's downfall was caused by the lack of on-chain liquidity to absorb circulating UST. In other words, there were roughly $20 billion of USD circulating and less than $2 billion of USD on CRV to be swapped into stablecoins, which was a recipe for disaster, right? As soon as a bunch of big entities started, taking USD, dumping it into CRV pool, then everyone just panicked, and at some point there was no more exit liquidity for USD on CRV, because CRV is the de facto major stablecoin AMM. And I'll explain this slowly, and I'll provide a link in the description below of his tweet so you can kind of go through it slowly. But essentially, so these numbers are a little bit off because a lot of new developments have happened. But at the time of recording, at the time where he wrote the post, the Frax 3 CRV TVL, so this is the liquidity on CRV, was roughly $1.6 billion. And of course, it's a 50-50 pool. Of course, it's not always 50-50, but just simplifying things, if the TVL in the Frax 3 CRV pool is 1.6 billion, then that means there's $800 million worth of Frax and also $800 million worth of 3 CRV, which is USDC, USDT, and DAI, right? So there's that much liquidity. However, Frax owns the majority of its own liquidity, right? The USDC that they have, right? Frax, when people were minting Frax, it's not just sitting there, it's being deployed on protocols such as AAVE and mostly on CRV. So Frax owns $1 billion worth of their own liquidity. So if you subtract 1.6 to 1.6 minus 1 billion, you get roughly $600 million of Frax that's circulating in, or 600 million Frax in circulation that's not owned by protocol. So the question of a bank run, of whether a bank run is possible, is asking yourself, okay, if everyone took their Frax and they try to exit via the Frax liquidity on Curve, can they do so? And of course, there's $900 million worth of, or roughly $1 billion worth of liquidity, $600 million worth of liquidity that wants to flee. So if you do the math, if all of the Frax and if all the liquidity that's not owned by Frax exited and like dumped all that liquidity into the 3 curve, it can't absorb it, right? So taking 2, which is non-AMO LP, which is non-Frax owned LP, and the amount of 3 curve in the pool, which is 800 million. So if you subtract that, then yes, there's going to be over $170 million worth of 3 curve that's going to be remaining, even if everyone just ran for the exits. Of course, the protocol is going to own their own liquidity. And not only that, there's also locked liquidity. So institutions, retail investors, they're farming, and if you lock your liquidity, you can earn better rewards. And there's an insignificant amount of Frax liquidity that's locked. So even if I locked my liquidity for a year, I can't pull it out, right? Even if I wanted to. So taking into account the excess 3 curve, which is USDC DAI tether, and also the locked liquidity, then currently, right, even if everyone wanted to exit, if all the non-Frax owned liquidity wanted to exit, they wouldn't be able to do so. So sorry for that. It was a poor explanation, but link will be in the description below. And of course the numbers have changed, but if you do the math right now, it's roughly the same. And Sam addressed this in the Telegram group, where there was like FUD around only 80% of Frax is backed. But if you actually do the math on 3 curve liquidity as well as locked Frax liquidity, then the CR of Frax is actually over 100%, which you can verify on chain, right? That's something you can do with DeFi. You can verify everything on chain. No under collateralized lending by Suzu, right? So given the protocol and liquidity as well as locked liquidity, if all non-Frax owned, if all Frax that's not owned by the protocol wanted to exit into 3 curve, they can do so. So low risk of a bank run, it's very unlikely. In fact, it's impossible. I mean, depending on when you're watching the video, it might be different, right? So, yeah, just do your research. So let's next touch on convex and curve. I think understanding convex and curve is vital in order to understand the value proposition of Frax and, the bull case that comes with it. So, of course, Frax is the DAO that owns the most amount of CVX, and this is important for various amount of reasons. I know Terra owns a bunch of Frax, a bunch of CVX. It's interesting because Terra actually relocked their CVX, so it sounds like they're gonna try to launch their own stablecoin because if they don't have plans for that, then they would have just dumped their CVX. That's interesting, and this is important because CVX, essentially, I mean, if you know anything about the curve wars, CVX owns over 50% of all veCRV, and veCRV is responsible for directing which pools receive CRV emissions. So Frax owns a bunch of CVX, so they essentially have the power to direct which pools get CRV emissions. And emissions are important because emissions essentially incentivize TVL and liquidity. Right now, the Frax 3 curve has a little bit over $1 billion in TVL, which will go down later, which I will explain. And you can see that there's roughly 2.25% of CRV, which is being redirected, and this is mostly due to the CVX that the protocol owns. So in other words, CVX determines which pools receive CRV emissions, and emissions are important because it incentivizes liquidity, which is essentially, if you don't have liquidity, then you really don't have a good stablecoin, right? And with the CVX that they have, a bunch of the CVX, and they're constantly accumulating more CVX, Frax has the power to direct CRV emissions on curve in perpetuity, which is important because because if you're like a new stablecoin protocol and you want stablecoin liquidity, you have to create a new pool and then have a new farm on your own application where people can stake your LP tokens, and then you can pay your own farm token, right? And that's kind of how you build liquidity. But obviously that's not a truly sustainable model. So what Frax did was that they've been accumulating CVX so that they can build out liquidity for their stablecoin without having to inflate their FXS supply too much. Their FXS is still inflationary, but it's going to be less inflation over time. And if you think longer term, then if they keep accumulating CVX, then at some point they're not really going to have to emit FXS to attract liquidity. So what Frax has been doing is that they own a bunch of CVX. They've been voting for their own pools. So and if you think about it, like what I talked about later, they own roughly $1 billion worth of their own liquidity. So they're voting for their own pool. Their own pool is acquiring CRV, and they've been dumping the CRV for their revenue. I think I saw the number. I think Frax for the last 12 months has generated roughly $60 million in revenue. This is for CRV, right? Farming and dumping CRV, as well as protocol revenue, etc. And if you want to know more about curve, convex, curve wars, all that jazz, I made a video 6 months ago. It's a 90-minute video. It's very, very long. It's a little outdated, obviously, and maybe I'll make a CVX CRV video sometime later down the line. But I think this content is still relevant. I know it's long, but it's pretty complicated. So if you're not willing to invest time into your own education, then I can't really help you there, right? Cool. So now that you have a general understanding of curve, convex, Frax, and that ecosystem, let's go over FRAXBP, because I've known about Frax ever since it launched, but I never really thought that it was worth investing in. I just felt that there was opportunity cost. But when I saw FRAXBP, this proposal passed last month, that's when I was like, okay, that's when I had the light bulb moment. I'm like, okay, they're actually trying to do something here. They're actually trying to disrupt the incumbents, which is essentially USDT and DAI. So last month, there was this proposal to deploy FRAXBP, right? So this is Sam. Hey everyone, Sam here from Frax. I've been talking to C2TP. C2TP is one of the core contributors to Convex. Michael Igorov is the founder of Curve and others to create this proposal, which I hope the community likes. And one thing you'll notice is that the Frax, Curve, and Convex community, they work really close together. And this proposal essentially kind of intertwines them as one single entity. Maybe not one single entity, maybe that's giving them too much credit. But it's essentially tying Frax's success to Convex's success to Curve's success, essentially. So the summary is to create a Frax base pool of Frax USDC and put up a vote for gauge and base pool candidacy. Then whitelist Frax protocol to stake veCRV to permalock majority of earnings as veCRV and CVX CRV from all FRAXBP emissions. If you don't understand this, then don't worry, I'll go over it step by step. But this is actually a game changer, in my opinion. I could be wrong, and if this isn't a game changer, then I'll sell my FXS. But my thesis is around this thing actually being a game changer. So let's first understand why this is important. And in order for you to truly appreciate this FRAXBP proposal, you have to understand 3 curve and the 3 pool. So 3 curve and the 3 pool is obviously this DAI USDC and USDT, which is the main pool on Curve across all chains, and it has over $1 billion in TVL. And of course, it's not that exciting, right? You just deposit Tether and you earn 1% or less than 1%. But what's so important? But this isn't really important because 3 pool before FRAXBP was the only base pool on Curve. And what a base pool is if you go to these stablecoin pairings, right? So if you go to curve.fi and you go to the See All tab, you kind of see this. And if you look at all these stablecoin projects like Liquidity USD, Frax, USDD, where is it? GUSD, Gemini USD, RAI, MIM, USDN, they're all paired with 3 curve, right? USD 3 curve, MIM 3 curve, GUSD 3 curve. You get the point, right? I don't even know what this is, but PWRD plus 3 curve, right? They're all paired with 3 curve. And that's because the Curve team, when they first launched Curve, it only allowed new stablecoin projects to pair, new stablecoins with 3 curve, right? Because it's the base pool. Similarly, Frax, right, is paired with 3 curve. And, I took the screenshot some time ago. It's a little bit less now, but, it actually is one of the largest TVL thing on Curve. And you can see the ratio there. So, like I said, let's say I'm creating a new stablecoin called Taiki, right? Whatever. If I want to create liquidity for my stablecoin, I have to go on Curve because it's the #1 stable swap exchange. And then I don't really have an option. I can't really pair it up with Frax. I have to pair it with 3 curve. So Taiki, DAI, USDC, USDT is the only thing I can create. And they're trying to disrupt this. And if you go to curve.fi, click the factory tab at the top, you can create your own curve. And if you click MetaUSD, the only thing you can select is 3 pool, right? So 3 pool, it's the incumbent, it's the safest thing, right? It's DAI, USDC, and Tether. And there was no change in that. There's nothing a new team could do. So going back to this proposal by Sam, summary, create a Frax base pool of Frax USD and put up for vote for gauge and base pool candidacy. So essentially Sam is saying that, okay, previously, the only base pool that people or new projects compared to stablecoin with was 3 pool. But now let's try to compete with that. Let's create a Frax base pool where it's Frax paired with USDC, so no DAI, no Tether, And let's get that to be the base pool. And if that gains adoption, then more protocols may pair up their stablecoin with a Frax base pool, which will just indirectly grow demand for Frax. And if the FXS burn is enabled, then, more demand for Frax, more burn for FXS, which should make number go up, right? That's kind of the entire thesis. But let's go over step by step on how they're going to get there, and I guess the incentive for new stablecoins to pair their stablecoin with FRAXBP. Sorry if I'm confusing you. To be honest, there's no really easy way to explain this. And even as I'm recording this video, I'm like, wait, like, am I making sense? But ultimately, you might have to watch this a few times if you really want to understand it. But I think you kind of get the gist of what I'm going for. Yeah. So FRAXBP is Frax USDC, no DAO, no tether, trying to be a base pool candidate. And this proposal actually passed. So it's actually already a base pool, right? But let's kind of keep going. And you might be asking yourself, okay, going back to my example of me launching a new project, which I'll never do, or maybe never say never, but I don't want to be that guy. So like, what's my incentive, right? Because veCRV is theoretically safer because everything is collateralized one-to-one, or it's over collateralized in the case of DAI. So why would I want to take the risk to pair up my thing with Frax, which is partially collateralized? And if you this is the same proposal. If you focus on where is it? Yeah, if you focus on here, it uses the example of Abracadabra, but you can replace this with any other protocol. If Abracadabra created a new meta pool, which is MIM with FRAXBP, and let's say the TVL gets to 500 million, right? Then that means half of that, roughly, is going to be FRAXBP, which will grow the demand for FRAXBP and the Frax stablecoin. Because if the FBP is 250 million, then that's an incremental demand for $125 million worth of Frax, if that makes sense. So the incentive for Abracadabra to choose FBP over pool is because going back to Frax owning a bunch of CVX, and because Frax owns CVX, it has the power to redirect curve emissions. And one of the problems Abracadabra had and other stablecoin projects is that in order to create liquidity for their stablecoin, they have to make their token a farm token. If you go back to my channel, like 6 months ago, like whatever, I was like farming Spell with like stablecoins, right? Because I could just deposit liquidity and farm Spell. And Abracadabra, like, they wouldn't want that because it's making their token inflationary, which might work in the short term, but it's not really a sustainable model. And Frax is saying that because they have CVX, if a project were to pair their stablecoin with FRAXBP, they will use their CVX and the voting power it has to redirect emissions to that pool. Okay, and Sam is basically saying that, hey, in the past couple of months, we've accumulated so much CVX and some veCRV actually. So if you choose to pair your stablecoin with FRAXBP instead of the incumbent, veCRV, we can help drive CRV emissions towards the pool from bribes, which is a major value proposition. Because let's say my target stablecoin APR for my new stablecoin is like 10%, right? Before FRAXBP, I would have to incentivize people to buy Taiki, the stablecoin, deposit it into Curve, and then stake that LP token on my application and pay 10% worth of my own emissions. But if I pair it up with FRAXBP, Sam will help subsidize those yields for me. So maybe Sam can, or depending on the TVL and emissions, maybe 5%, right, of Curve emissions can go to that pool, right, in terms of APR. In that case, without having to do anything, because I'm just pairing up my stablecoin with FRAXBP, I only have to pay 5% of token emissions for the Taiki token. So if you're in a stablecoin project and you believe in Frax being, the very low risk of a bank run for Frax, low chance of depegging because it's never depegged significantly, then that's enough incentive for more and more protocols to pair up their stablecoin with FRAXBP instead of veCRV. And if that happens, then that's going to drive demand for Frax, get it over peg, then more FXS has to be burned, and you kind of get the whole Luna situation again, but with less pumpamentals, if that makes sense. So as a result, it's all about incentives, right? New stablecoin projects should, acting in their own self-interest, choose this option with FRAXBP. This creates more demand for FRAXBP, meaning that there's more demand for Frax, which means the market cap will go up. If market cap goes up, then FXS has to be burned in order to accommodate Frax growing in market cap. So that's the entire idea around FRAXBP and the whole bull case around FRAXBP, because it's not enough for for these stablecoins to hold peg, there has to be utility, right? For these stablecoins to grow in market cap, and this proposal around FRAXBP is trying to create more utility for Frax, having it be the base pool on Curve. So you might be asking yourself, okay, like what are the effects on Curve and CVX? And there's more parts to this proposal which I think has merit. So if you remember earlier, I mentioned that part of Frax's revenue model, or part of the way they generate revenue, is by having a bunch of protocol and liquidity, driving Curve emissions towards their own protocol own liquidity, farming CRV, and then dumping it, right? And that they've been generating a bunch of money for that. So Frax is backed by USDC and also the cash flow that it generates. And this, obviously the Curve community doesn't like that, because this protocol with like $1 billion in TVL is like farming and dumping CRV. But Sam mentions that this is not out of choice, but out of an inability to lock veCRV, which we hope to change with this proposal. So how Curve works is that, so Convex, for example, is able to lock up veCRV, right? And veCRV has the power to direct emissions. So if Frax were to be whitelisted on Curve, then Frax protocol can actually start locking up CRV that they've been farming for veCRV, which is what they're proposing. So, what Sam is saying is that, yes, we used to farm and dump CRV, but if you whitelist us, we're going to stop dumping. We're going to lock up all the veCRV, or we're going to lock up all the CRV that we farm into veCRV, which should align incentives with with the entire community, right? Because if Frax stops dumping CRV, then CRV price should go down less. And if CRV price goes down less, then CVX technically has more value, because if Curve is $1 versus $2, of course CVX will have more value if Curve is $2, right? Because it's able to direct more dollar amounts, every voting round. So that's kind of what he's proposing. And all of this passed, so it's already happened. But you can kind of go figure out okay, it started from that, right? They own a bunch of liquidity, it wasn't growing that much. They were farming and dumping CRV, but now they're proposing to be a base pool, creating more utility for Frax. And now they're even saying that they're going to stop dumping CRV, which should accrue more value for CRV and also CVX. Okay, already said this, right? And also, Frax is going to continue to accumulate veCRV, and the whole value proposition around CVX is that they control veCRV. So Frax is going to farm CRV, lock it up, and continue to farm CVX, accumulate CVX. So with the veCRV, with the CVX that they're going to continue to accumulate over time as they farm more stuff, they're going to just have more and more influence in the Curve wars, where Curve emissions go. So with this whole flywheel, with this entire proposal, they're trying to essentially use the Curve convex wars, whatever you want to call it, with this new proposal to compete with 3CRV, right? The bull case for Frax is to compete and overcome 3CRV, because 3CRV has been the major stablecoin liquidity pair for ages, right? Ever since Curve launched. But should that be the case at all times? Probably not, right? If we're trying to create a decentralized future, where we have less reliance on centralized stablecoins, then it makes sense for us to, or maybe not us, but for the entire community to try to get away from Tether and USD. I mean, it's not really getting away from USDC, but at least getting away from Tether, because the entire crypto community and just people in Curve as well have been asking for an alternative to 3Curve, just because people are scared of USDT, which depending on your views on Tether might have some merit. So maybe people will feel more comfortable getting into FRAXBP because it doesn't really have exposure into Tether. And yes, Frax is under collateralized or partially collateralized, but if they can slowly grow over time, and with the whole example that I gave with going over the math by Ouroboros Capital, if a bank run on Frax is technically impossible, then FRAXBP should be safer than Tether, if you think Tether is risky. I don't really hold that view, but I can't say the same for other people. So this is going to be this. I mean, this already passed, but these were the steps, right? They're taking a very methodical approach of step 1, step 2, step 3, step 4, and then once it happens, we're going to slowly migrate TVL away from Frax 3Curve to FRAXBP. And yeah, FRAXBP is already live, you can see. It doesn't have that much TVL, right? This isn't going to balloon to $10 billion overnight. It's going to be a slow process. FRAXBP, right, with the whole helping to subsidize yields aspect. They need more stablecoins to launch. They need, more demand for alternate stablecoins. And in this bear market, there really isn't like a bunch of new stablecoin projects launching. So like I said, it's a longer term play. But if you believe in FRAXBP, if you actually believe in what Sam is going for, then at these depressed prices, like maybe FXS could be an interesting investment, right? So with the farmed CRV, 5% of the farmed CRV is going to go into veCRV, right? So this is owned by Frax, and then 95% of it is going to go into CVX CRV, and CVX CRV is the veCRV that Convex accumulates. So, Frax is trying to be a positive sum player in the space by saying we're going to stop dumping CRV and we're going to help accrue more value into CVX, which makes sense because Frax is just it's basically going all in the Curve ecosystem. So having this positive sum mentality makes sense from Sam's perspective. Yeah, so like I said, they're going to lock 95% of the CRV that they're going to farm into CVX so that Convex can continue to be this veCRV monopoly. I've shown it like previously in the slides, but I think right now they own roughly 54% of veCRV, and I think it's reasonable to expect that at some point they're going to have maybe 2/3 of all veCRV, which is going to just make them major players. I think that makes Convex have some value, but it's hard to quantify that right now in this type of market, right? Oh yeah, I have it right here, 54%. And I think with the monopoly that they have, this number is only going to grow over time. Okay. Yeah, so FRAXBP in the most recent proposals create a positive flywheel between FXS, CRV, CVX, and FXS future success will now be tied to the success of CVX and CRV, right? I feel like Frax is kind of going all in CRV. So if you believe Curve is going to be around, if you believe that Curve is going to continue to be the main stable swap, and if you believe that FRAXBP will gain adoption, then I feel like FXS is going to be a no-brainer longer term play. Not financial advice, I am biased. That being said, yeah, similarly. For me, I've had I made that 90-minute video on Convex, right? So I've had my eyes on this ecosystem for a long time now. I never bought into it just because I thought I could outperform, even though maybe that was a bad idea. But I consider Curve to be DeFi infrastructure. When you think about infrastructure, you don't really think of AMMs as infrastructure, but I feel like Curve as the stable swap liquidity hub, all stable swap curves, or maybe not all, but the majority of swaps, right, for stablecoins happen on Curve. So I feel like that is infrastructure, right? Maybe I'm jumping hoops there, but and I feel like if you look at the last bear market, the coin that outperformed the entire market was Chainlink, right? And Chainlink was an oracle, and it's kind of infrastructure. So I feel like I consider Curve to be DeFi infrastructure, right? And maybe that's wrong, maybe that's incorrect, and maybe Curve is obsolete in 5 years, and in that case, FXS might be in trouble. But with my bias that I think Curve is going to survive, I feel like FXS is kind of like a levered play on CRV in my opinion. Because FXS owns CVX, FXS is integrating the Curve, and if Frax grows a market cap, then FXS will indirectly benefit from that. I feel like one of the killer use cases in crypto, definitely stablecoins, right? The USDC, USDT market cap is up only, but there's no way to, or at least as retail investors, it's really difficult to invest in equity for Circle or Bitfinex, right? Circle, USDC, and Tether. But with Frax, I feel like I could invest in the equity of its future growth. So that's kind of how I'm thinking about it, because yes, Luna, UST, that was bad, in hindsight, but that's not going to stop me from looking for decentralized stablecoins. I still feel like that total addressable market for a decentralized stablecoin is huge. So I'm going to continue looking for investments there. I feel like it always warrants at least some percentage of my portfolio. So in terms of top 5 applications at the most TVL, it's MakerDAO, AAVE, Curve, Lido, Uniswap, right? They all have over $5 billion in TVL. Of course, this kind of depends on the price of crypto and whatnot, but I consider all of these protocols to be core infrastructure, right? AAVE is top money market, Curve is the stable swap exchange, Lido as the leading staking ETH derivative, and Uniswap as the number 1 AMM, right? And we had this conversation in Discord, right? Because I was kind of contemplating, should I buy FXS, should I buy CVX, or does it make sense to buy a CRV as the base, I guess, app layer? And EDK had a really good explanation for this. So, maybe I'll read there. So betting on CVX is betting on multiple protocols, right? So future protocols accumulating CVX so that they don't have to have their own token be inflationary, right? And participate in this curve wars. And from a retail perspective, you kind of just predict that, right? And you're trying to front run these new protocols that will pop up that's going to accumulate CVX. And by holding CVX, you get to accept bribes from protocols that want to direct curve liquidity. So yeah, betting on CVX, betting that CVX will be the kingmakers in the curve wars. But betting on FXS is betting on Frax to be the leader in stablecoins, right? That's not like USDC Tether, maybe overcoming DAI. Having Fraxlend becoming the bridge between like CeFi and DeFi. I'll go over Fraxlend later, which I think is pretty cool. FraxSwap TWAMM, I'll also go over that later. But Frax isn't just a stablecoin. They're also building Fraxlend, trying to be their own bank, and also having their own AMM called FraxSwap, which will help other DAOs essentially buy back or sell their own tokens. Also FPI, which is the Frax price index, a stablecoin pegged to inflation, and ETH staking. I'll go over this later, but I'm kind of just priming you for what you'll see later. And then Chaos, right? Who I made the video with 6 months ago, saying that there's always this question about CVX levered bit on that, FXS lever, there's all that, but he thinks it's clear that CVX is a levered bet on CRV because CVX revive yields is dependent on CVX price each epoch. At this point, maybe I'll just skip this section because I'm just saying the same thing over and over again. But the point is, CVX, CRV, FXS, they're all intertwined, and if CRV does well, I feel like CVX and FXS will do well, right? That's kind of the vibe I want to give off. So let's kind of pivot here. Let's talk about AAVE launching GHO, and I think the GHO stablecoin, and I think where AAVE decides where GHO goes to is going to really determine whether or not my thesis is correct and whether or not Curve is going to be the de facto stable swap exchange. So for those that don't know, AAVE is proposing this new stablecoin called GHO, right? Most likely going to be called Ghost, similar to the MakerDAO model where AAVE already has a bunch of collateral and people can borrow Tether, USDC, DAI, but GHO will be their own native stablecoin. And AAVE governance token holders can vote on what interest rate to charge GHO borrowers, and that can be an additional revenue source for the AAVE protocol. And people are saying this is super bullish AAVE, and I'm sure that in the longer term it's going to be bullish AAVE. But I think in the short term, I think the main benefactor is going to be Curve. This isn't necessarily going to increase AAVE's cash flow. Of course it's going to raise it to some extent, but it's not going to be like a killer amount, right? If the borrower rate is 3% and $1 billion worth of GHO is borrowed, then they're going to generate $30 million per year, which is a lot, but it's not that much if you compare it to the current market cap and fully diluted value of AAVE, the token itself. Of course, if AAVE someday has $100 billion, $1 trillion in assets, of course, it's a major cash cow, and I'm sure it'll get there at some point. But in the short term, I feel like AAVE, they're going to launch GHO. It's most likely going to be listed on Curve, and it's going to increase more volumes for Curve. It's going to increase liquidity on Curve, and if GHO gets paired with FRAXBP, it's going to confirm my thesis. And if you think about it, we think of Curve as just a stable swap, right? And that's it. And there's also Curve V2, right? With TriCrypto and whatnot. But I feel like Curve and FXS can be thought of as a stablecoin launchpad. So going back to the same proposal, right, of Frax essentially subsidizing yield for new stablecoins to launch on Curve. The idea is that if you're a new stablecoin, you need liquidity on Curve. If you have a stablecoin and you don't have liquidity on Curve, then you're just not a good stablecoin, right? So and if you're a new stablecoin, I think you're just going to be incentivized to pair your stablecoin with FraxBP just because they can subsidize your yields for you, which I think is really, really important, right? If you're a new stablecoin protocol, if you're a new protocol in general, then in order to attract liquidity, you have to just pump out your own farm token, and it's going to just make the token go to zero. But if FraxBP can subsidize some of that, then it can help alleviate those sell pressure. And just thinking about incentives and whatnot, it just seems like FraxBP is going to gain adoption, right? That's kind of the whole point. And Go, right? This launching at some, I don't know what's gonna launch, but this launching at some point might mean that AAVE might just buy CVX on their own, so that they can just vote for emissions to go to their own protocol, or start bribing, right? So AAVE can just emit their AAVE token to CVX holders in order to essentially so that AAVE can bribe people with CVX to vote for CRV emissions for their Go stablecoin. They might even pair up Go with FRAXBP for subsidized emissions. I have no idea what they're going to do. Stani, the AAVE team, hasn't really said anything regarding this. I think they're probably going to launch it with veCRV. There were like some proposals like balancers. So I'm not really sure what they're going to do. But if AAVE decides that on day one, to build out liquidity, they're going to pair it up with FraxBP, it's going to confirm my Frax thesis, right? Because the entire Frax thesis is that more stablecoin projects are going to pair it up with FraxBP. So that might be like my confirmation to like buy more FXS. Like if this news comes up, right? If FXS might like go up 20%, but I'll buy that green dildo, right? I'll just buy it up, just because it's a signal that this is the beginning of a paradigm shift, something new. I might just buy CVX. I mean, I don't know. Like, we'll see. Patient. I mean, I don't even know when this thing's gonna launch, right? But that's kind of one of the things you can look for as an indicator of whether or not FraxBP will be a success. If FraxBP isn't paired with Go, it doesn't mean it's a failure. It just means that okay, like maybe they need better incentives. But we'll see. We'll see. Okay. I don't even know how long this video is. I'm tired. But I think I have. Okay, we're at slide 70. I think we have like 35 more slides left, right? So let's go. Okay, so another reason I bought FXS, which led me over to which led me over to Hurdle, is the $20 million buyback program that they proposed recently. And if you think about a couple weeks ago, I made this like satirical video on like why I'm bullish, and it was like a joke video, right? And I gave some examples on a bunch of these DAOs, essentially like dumping their own token, dumping their ETH into the market just because they like bag held their own token and they were nervous about having a runway for their own protocol, right? Because most of these teams, their treasuries are denominated in their own token or ETH. So if times are bad, they're going to be forced sellers, right? They're going to like, oh my god, we need to raise stable coins. Let's like dump this thing. So even though a bunch of these other protocols were dumping their governance tokens or ETH, once the market's dumped, around mid-June, Sam came up with this proposal to buy back their own FXS token. And this caught my attention because every other team were dumping tokens. But FXS came out of nowhere and said, you know what, we're going to buy back our token. So, over the past month, the markets have become bearish. Prices have dropped a bunch. FXX also nuked a lot, right? Just because the burn stopped and FUD around UST, all the stablecoins and whatnot. Frax, like even though that happened, Frax's peg was resilient, never been in doubt, and has held perfectly since inception. True. Protocol as a whole has been in excellent shape. Thus, the core team does not believe the significantly worse performance of FXS is justified, and feels confident to propose a large $20 million buyback program using the time-weighted average market maker, FraxSwap, if the community approves. And of course, right, pump our bags, right, community approved. And essentially how they're going to do it is that they're going to deploy their Frax onto their FraxSwap, which is a time-weighted average market maker. It's essentially a way for Frax to slowly TWAP Frax into FXS over time. And of course, the question is like, when buyback, right? When green dildo? When big dildo, right? Give me that wick. That was the question the entire community was asking. But it's going to be a very slow, methodical approach that Sam and the team is going to take. So Sam said, "Already started, sir. If you know where to look, this TWAMM buyback has already begun." I asked, I didn't include a screenshot, but essentially, the first phase of this $20 million buyback was a $2 million buyback over the 30 days. So I think this is like over the month of July. And Sam said, yes, it's already started. And you can kind of see on-chain how much Frax is being sold into FXS on FraxSwap. So this is FraxSwap. If you go to the application, the Frax application, you can see that the protocol itself is selling roughly 3K of Frax per hour into FXS, right? So this is going to be a very slow buyback program where, I don't really know like if they're going to do this over like 10 months, right, to get to 20 million. But at least for the first month, they're going to just do a $2 million program for 30 days. And it's going to be a very slow, methodical approach. So it's $67,000 a day or 70K a day to simplify. And if at this constant rate, it's going to take 10 months for the protocol to buy back 20 million. It makes it less attractive to be a front runner. But good to know that there's a bid on FXS, in my opinion. Yeah, and yeah, Sam said that, yeah, they're going to buy 67K worth of FXS per day. Yeah, so, and EDK in the Discord mentioned that this isn't really for fundamentals, but I think, or he thinks that Sam is doing this as like a marketing method so that other DAOs will look at this and be like, huh, maybe we should use FraxSwap to buy back our own tokens. Because if you go back to like Abracadabra spell, right? There was like this thing called like the Merlin candle, where Danny was like, "Oh, Merlin candle is coming! Oh, big whip, big wick coming!" Right? And I feel like every week or every other week, the protocol would like take all the fees that they generated and just like execute all that into like one buy, right? And like the candle would like look like a big green dildo, and then everyone would sell into that, right? That was like pure exit liquidity. Obviously, like it's like bad to do that, right? But people loved it because like bull market, right? But this way, Frax and the protocol itself is able to buy back their token over a very long period of time without really affecting the price. And if other protocols like Ohm or whatever wanted to do a similar program without having to rely on a human to just like click buy all the time, they can essentially create a buyback program through FraxSwap and just automatically through smart contracts initiate a buyback program. So, and if more DAOs implement this approach, then FraxSwap will generate fees, which will give Frax more revenue generation. Who knows? So with FraxBP passing, with the buyback program being approved and actually being executing, that's why I basically bought FXS. I believe in FraxBP, and yes, market is kind of iffy, but if I know that the protocol is buying 70K worth of FXS every single day, then it's good to know that someone has my back, right? Someone has my back, right? I'm not being dumped on. I mean, I might be whales might be dumping on me, but at least Sam isn't dumping on me. Okay, next, Fraxlend. I'm getting tired, right? I'm sorry, guys. I'm tired. But Fraxlend is a way for protocols or individuals to post collateral and borrow Frax, and that's going to be additional revenue drivers for FXS. So Sam mentioned on June 17th they wanted to release it by the end of June. Obviously that didn't happen, but if you actually check the chain, Fraxlend is already live. It's actually live on Polygon. It's on Stealth, and it's being tested on Polygon because it has low transaction fees. And I think this is pretty interesting. I don't really know what the ramifications are, and I'm not really sure how much people are going to use it, right? But Frax is not only a stablecoin, but it's also becoming its own bank, and it's also going to be a way for other protocols to just initiate buyback programs. Harvey Milk, Harvey Mizzle on Twitter saw on Polygon, or I guess Cold Story found it, this contract, but it's pretty interesting. Fraxlend is going to enable custom vaults with programmable loan to value ratios, liquidation fees, maturity, penalty rates, and whitelisted borrowers and lenders. And this essentially means that it's going to enable under-collateralized lending between consenting parties. And of course, under-collateralized lending has a bad name, 3 arrows and whatnot, but under-collateralized lending on-chain is a lot safer than what happened with 3 arrows, because 3 arrows was essentially able to just borrow money from a bunch of parties, and it was kind of in like a black box because like these parties were lending to the same party, and people just trusted 3 arrows blindly because they had a bunch of Twitter followers or something. But if it's actually on-chain, then people can actually verify that, okay, that entity is borrowing that much, and it's gonna lower the risk of having this entire systemic collapse. Obviously, it's not live yet on mainnet, right? It's going to be a mainnet product, ETH mainnet, but definitely interesting, right? I'd imagine institutions or DAOs to be whitelisted, maybe borrow Frax, under collateralized, pay an interest rate, and that's going to drive more demand for the entire protocol. And yes, it's risky, right? Under collateralized lending, but if you look at the track record for the Frax team, they've been very, very slow, conservative with their entire approach of Frax, right? So looking at their track record, I feel like they're not going to just go crazy with this under collateralized lending. It's going to be a few parties to begin with, and then maybe they can scale it over time as Frax grows in market cap. And yeah, I asked if it's real, and then DeFi Dave confirmed it's real. And I suggest everyone subscribe to the Flywheel podcast. They have 300 subs. Like, get this to 1,000. They have this own. I mean, they have their own podcast focused on the Frax ecosystem, which I think is really cool. And I feel like one barometer that people can look into in a bear market is thinking about, okay, which protocols have community members that are launching podcasts in a bear market. I feel like those kind of communities, those kinds of projects are more likely to survive than like random protocols that doesn't have such strong support from its community. Of course, as you can see, I've watched all of them except this one. Maybe I should watch this one, but these are all really good videos if you want to understand the Frax ecosystem better. Next, almost done, right? Let's talk about FPI. It's called the Frax Price Index, and they claim to be the first stablecoin that's pegged to CPI. And they're going to use Chainlink oracles, and they launched recently. And if you hold FPI, it's pegged to inflation. So if the CPI is 9% and it's 9% over the next 12 months, then $1 with the CPI, $1 or one FPI will appreciate from $1 to $1.09. So it's something that you can hold, which will be pegged to CPI. So maybe it's like a good inflation hedge, right? And in this interview with Drake on Digital, Sam from Frax mentioned that he thinks FPI will one day flip Frax in market cap, but slowly, which is big words, right, coming from Sam. Personally, I don't think it has product market fit. Like, if I held stable coins, right, if I held dollars and I wanted to outperform inflation, like I'd rather seek out farms myself and not take on like the risk of FPI because it's so new, and like earn more than 9% yield, right? Or earn like roughly 9% yield. And I can find like those yields relatively easily just because I'm like in touch with the markets. But I guess I'm not their target market, right? I guess they're more targeting people that are less, I guess, financially literate, that just like want to hold something to perform at par with inflation. So maybe I'm not really seeing the vision here, but I'm not too optimistic on FPI. I'm not that optimistic this thing, but who knows? Next, FRAXETH. So if you go to this link, facts.frax.finance/frxETH/validators, you'll see that right now Frax has 2 validator nodes on the beacon chain for ETH, right? ETH 2.0, and they generate like 0.25 ETH, which is like nothing, right? But it's something, right? And Sam in the Telegram group mentioned that, and he's mentioned this in interviews as well. He wants, of course, like Frax. They want to eventually get like a decentralized collateral and not have it to be too reliant on USDC. And it'll be cool if Frax, the stablecoin, was backed by interest-bearing ETH, right? Staked ETH on the beacon chain. That way, it can actually be an ETH native stablecoin that could be more decentralized over time. And he's kind of alluding to it here, where maybe at some point people can take FRAXETH or staked ETH essentially, right? Because FRAXETH is a liquid derivative of staked ETH, and then use that as collateral to mint Frax itself, right? So that way it can kind of decentralize its collateral. It's going to take time anyways, so maybe that's the bull case here. And I have no idea what this means, but also in past interviews, Sam has mentioned that he wants Frax to be its own chain at some point. And you see this trend across other applications like DYDX becoming its own app chain on Cosmos, on IBC, abandoning Starknet, right? ETH Maxis be really mad. I'm not really sure what the vision is. I feel like some major protocols make sense for it to be their own app chain. I don't really know what Sam but I don't know, he's definitely thought through his own protocol a lot more than I did. So that's also something, right? If Frax or FXS can be a staking token for their own L1. Okay, cool. So FRAXETH is a liquid derivative of staked ETH. It's likely that at some point Frax will be backed by staked in the future as the liquidity for Frax matures and grows over time. Okay, summary. Slide 98. Slide 99. Okay, Frax team continues to build, this is my thesis, and is establishing a moat around FraxBP by becoming the central liquidity hub on Curve. I expect Frax market cap to hit all-time highs at some point. Its previous all-time highs were like roughly 2.8, 2.9 billion. I expect Frax to get past that at some point. And I believe that FRAXBP is going to be the main driver for Frax to get to its all-time high. And I feel like in this market, especially in a bear market, this is where competitive moats are built. If in a bear market, you're a project and you're building and you're not creating a moat around your product, then I do not want to invest in your product, right? Like bear markets are when there's like less speculators, there are less builders developing in the space. So if you're building and you can't build moats, right? If you can't build competitive advantages during the bear market, then you're just like, then perhaps your product does not have product market fit. So I feel like FRAXBP can become a moat, right? Because imagine a scenario, maybe, I don't know, like 2023, FRAXBP is $10 million, new major stablecoins or new stablecoin projects are choosing to pair up their stablecoin with FRAXBP because Frax owns so much CVX and CVX owns so much veCRV, and we have this ecosystem of new stablecoins launching, new stablecoins growing in market cap, and as new stablecoins grow in market cap, it has to be counteracted, right? Balanced out by FRAXBP growing in market cap, Frax growing in market cap. Ooh, up only. that's kind of the mentality that I have, and that's kind of the thesis for FXS and Frax itself. And yeah, like people say like, okay, like Frax is cool, I like Sam, but it's never gonna get to like $1 trillion. It's never gonna get to like $100 billion market cap. And, maybe it won't. But if you're betting on FXS right now at like $5, you don't even have to bet on Frax getting to like $1 trillion in market cap, right? If FXS burning is enabled at some point and Frax gets like $5 billion in market cap, I feel like FXS is going to get all-time highs at some point. And I feel like $5 billion, if FRAXBP works, is a very conservative estimate, right? And of course, this isn't happening anytime soon. If you're buying this now, then, like longer term time horizon, right? Be a bag holder with me. I'm more than happy to ride drawdowns, right? Need more time for confidence to develop in FRAXBP, algo stablecoins in general, and more stablecoins to launch. Because if no stablecoin projects are launching, then like, no one's going to pair up with FRAXBP, obviously. And FRAXBP is live already, as I've shown earlier, and the liquidity is roughly 300 million. So the goal is for Frax 3 curve to slowly be deprecated over time, and for all that liquidity to migrate onto FRAXBP. This isn't going to happen overnight, right? It's going to be a slow drip. So at the very peak, I think Frax 3 curve is like 2 billion, 1.6 billion, and now some of that is like slowly dripping into FRAXBP, as you see here. And if you track Sam, if you track Frax and all the governance proposals, I feel like Frax working with Curve, Convex, and other ecosystems in general, and being a positive sum actor in the space, right? Just having these proposals like, hey, we're gonna stop dumping your tokens, we're gonna lock up your tokens actually. Being a positive sum actor with a strong governance process really makes me think that the Curve ecosystem is like the most DeFi thing in crypto that I've ever seen. And no one should be like buying things because it's like the governance proposals are amazing, right? Like that's not a great investment process or a thesis. But as a DeFi Maxi, as a DeFi lover, it's hard to view what's happening with Convex, Frax, Curve, and not appreciate the people in that ecosystem. Because like in a bull market, right, you just like want things to pump, right? You like cheer on Danny and Do Kwon, but in this period, I mean, I guess I'm cheering on Sam, but I think I think the Frax governance proposal is, pretty decentralized. I mean, obviously not, right? If Sam says he wants something done, it's going to get passed through, right? So it's not actually decentralized. But you can say the same for Ethereum, right? If Vitalik says something, if Vitalik like wants something done, like people will like, oh yeah, like vote for it. And I can actually see a scenario later down the line where FXS, CVX, CRV is completely decentralized. And that's kind of the world where I want to live in. At this point of the market, I'm just like more thinking about, okay, if DeFi is around in 5 years, if DeFi has $500 billion in TVL in 10 years or like whatever, right? Random numbers. What kind of projects will be around? What kind of tokens will be valuable? And in this utopian scenario, I feel like FXS is definitely in the equation somewhere. And yeah, like I said, like you don't really have to bet on Frax like becoming the decentralized stablecoin, the medium of accounts that the entire world is going to trade on, right? Like you don't have to bet on that. Like I just feel like, is it reasonable for Frax to get to like $10 million in market cap? Yeah. Is it reasonable for FXS burn to be re-enabled at some point? Yeah. Okay, then I'll just buy it and hold it and wait, right? Just buy and hold, buy, wait. bag holder mentality. Let's go. And yeah, so I'm sure I'm gonna get this question right. Like, they're all intertwined. Like, are they all the same bet? Which is like the best investment? CRV inflationary, CVX inflationary, FXS kind of inflationary. I don't have a good question to this. I'm constantly asking this myself. I'm kind of betting on FXS just because, you know, the long-term sustainability of CVX is uncertain. I do like CVX though, right? I mean, yeah, I do like CVX. But I feel like FXS is a bet on a stablecoin utilizing the Curve ecosystem, the convex ecosystem, to grow their stablecoin and thus accruing value to FXS. So is it better to bet on the app layer like Curve? Is it better to bet on the derivative of Curve such as CVX? Or is it better to bet on a project utilizing the app layer and the derivative to grow their stablecoin to like whatever market cap? I don't really have an answer to that. Similar bets, separate. But I just chose FXS. I don't, at the time of recording, I don't own CVX, but I can definitely change my mind in the future. I just chose FXS because it's basically a bet on a stablecoin growing, and it's very, very hard to be able to bet on a stablecoin that's growing. You know, like if I could bet on USDC or USDT grow, like I would do that in a heartbeat, right? But I can't do that, so I chose FXS. And I already showed this earlier, but you know, separate bets, similar bets. But you know, if FXS does well, it's because CRV and CVX is doing well, right? So it's more asking yourself which one perform, which one underperform, and yeah, just open-ended question there. So conclusion, right? I don't even know how long this video is. If you tuned in, if you're still listening, then like I don't know, like you must love DeFi, right? Like what the hell? Like who the hell are you? So a bet on FXS is a bet on Curve, maintaining their stable swap dominance. Tracking FRAXBP adoption in the coming months is key to understanding whether the thesis is playing out. If FRAXBP is a flop, then I will sell my FXS. That's kind of how I'm thinking, right? FRAXBP, I think, is the paradigm shift or like the bull case. If I'm wrong, then I'm wrong, right? It's fine. Given the $20 million TWAP happening, FRAXBP integration, and Curve, you know, maintaining TVL, core infrastructure, CVX accumulating more veCRV, I felt like buying FXS had a very attractive RR. Right? That's kind of why I purchased, and you know, I have a very, very long time horizon on this one. And you know, Sam, I think, has proven himself to be, you know, a DeFi native. If you let's like watch and listen to his interviews, he really understands the game. Like he understands how the game is played. He understands what it takes to grow the market cap of stablecoin. And I don't know if you can see the date here, but this is Sam's speech at UCLA on October in 2018. And he was speaking to a bunch of UCLA students, his alma mater, on why stablecoins are the next big wave in crypto. So you know, he's been thinking about this for a very, very long time. And everything that he's shown, you know, with his past actions, his track record, leads me to believe that, you know, he's someone that I could bet on. And of course, with crypto and DeFi, you know, ideally it's like something similar to Satoshi, where like you don't only have to bet on an individual, right, for something to succeed. But you know, in these early stages with DeFi and crypto, like you do need a founder. You do need to look at someone, to point to someone and say, I do believe in that guy. I do believe in that woman, or I do believe in that leader or that entity, and you know, just really vouch for, you know, the founder. Because when you're betting on a company, a token, equity, whatever, you're betting on a team to execute. And I think Sam and his team has proven to be very, very competent, right? Or like much more than competent, in my opinion. And yeah, I don't even know if this picture is like real. I just found it on Twitter. And on Google Image, if you look up Sam Kazeemian working out, this is like the first thing that pops up. I don't know if this is true, but look at those abs, right? Like he can carry my bags to victory. So let me check how long this video is. Nice, over an hour. So it's gonna be. I'm very, very thirsty. I'm very, very thirsty. So, no, I guess last words. Or maybe not last words, but you know, I feel like, you know, Frax, FXS, Sam, thinking about first principles, thinking about where the puck is going when it comes to DeFi, I just felt like this is something I feel comfortable just buying and holding. It might underperform like random things that pump, but you know, I feel like at this stage in the cycle, I don't really want to trade things. I don't want to flip things for like 10% and like, you know, sing kumbaya and like, you know, dance hallelujah, whatever. I'd rather just buy things with conviction, build theses, check fundamentals, track data, and just really try to buy and hold. Because if you think about the gains in crypto that people have made over the years, you know, it's primarily from holding strong assets and just like not selling too early, right? That's something I want to miss. Of course, you know, selling is important and whatnot, but yeah, that's kind of thinking about it. So thank you guys for watching. If you're interested in more content, daily updates, live streams, check out the private Discord. The link will be in the description below. But you know, with DeFi, fundamentals looks bad. I see a lot of sentiment around DeFi just being a scam and whatnot, and I can definitely get around that sentiment, right? And there's a chance that, you know, the DeFi that'll be around in 5-10 years might not even be the iteration of DeFi that is around today. But you know, I'm not gonna I'm just like very optimistic DeFi in general. Even in the 3 euros scenario, I just feel like the reason crypto imploded was because of these loans that happened behind closed doors, where like no one really knew like what the hell was going on. But even Celsius, as they were imploding, they had to pay off their loans on MakerDAO, AAVE, in order to get their collateral back, right? And we could do that on chain, or we could verify that on chain and track it in real time. And that's how we could kind of track, okay, like Celsius is about to, you know, pay off their loans and whatnot. I think there's beauty in that. Of course, no one cares about that right now, but I do think that over time, more and more liquidity, more and more TVL, more and more assets will be tokenized. And, you know, the biggest use case for crypto right now, or like one of the killer use cases of crypto right now, is tokenizing real world assets. And that real world asset is dollars, right? Tokenizing dollars, bringing it on chain has, you know, truly been a remarkable feat, and, you know, generating yield and whatnot. And I think Frax is, you know, a bet on that. And I'm very, very excited to track their fundamentals and see where the protocol is going from now on. I just realized that I'm like speaking passionately about DeFi as Frax, as Sam's muscles are on screen. So, okay, let's change it, right? Let's change it. So, yeah, that's a better view, right? Professor Sam. So, thank you guys for watching. Check out the Discord. Check out my Twitter. And if you, yeah, I'm tired, right? I'm out. I'm done. Bye bye.